All right, good evening, everyone. Welcome to the new week. So, pretty exciting kind of events that unfold last week, more specifically closer towards last weekend. We had a couple of unfortunate events. If you're following the news, we did have like the plane crashing event, and of course, on a bigger scale, Iran and Israeli conflict as well, which kind of causes the market to move um, quite a bit, right, in terms of like shifting towards risk off environment. Okay, and of course, that had an impact in certain asset classes as well, right, which we'll talk a little bit as we kind of talk about and focus on those asset down the list. Okay, so yep. With that said, okay, just want to remind everyone that since we're talking about the financial markets, in this kind of sessions, just be aware that that's the general risk disclaimer. Things I'm covering over here, solely based on my personal point of view and purely for educational purposes. We'll talk about trade setups. We'll talk about weekly opportunities. But just bear in mind that you're aware, of the risks involved, and of course, every time you're gonna take a trade, just take into account your personal risk appetite and management plan. Okay. So as usual, what we're gonna do over here, I'll walk you through the markets overall, and I'll highlight, some of the opportunities I think it's worth noting for this week, based on what we are looking at right now. What are some things that I'm expecting? And of course, if you have questions, then just put it into the chat. Okay, I'll do my best to answer as many questions as we can in sessions like this. Okay, good. So with that said, let's start off with the dollar index over here. Okay, so dollar index as of now, we are expecting the fifth wave completion. So you can see if I scroll out a little bit, okay, in terms of the blue label, right, from the top over here that were established at the beginning of this year, we have seen obviously the dollars kind of weaken quite a bit. Okay, and wave 3 expectation were somewhere around, closer towards end of the April. Then we did get a bit of pullback, and then right now we're seeing the dollar making a move lower, right? And last week we did have price tag the previous low here. And right now we're seeing this a little bit more of a diagonal structure, right? It doesn't really come down very strongly and impulsively. Okay. So over here we are possibly looking at a fifth wave plus a diagonal within the fifth, right? So 1, 2, 3, 4, 5. This can obviously extend a little bit more. It doesn't necessarily mean that fifth wave is gonna end here. But general structure we're looking here is like a diagonal, which kind of suggests that the downside may be ending soon. Definitely not, gonna look to buy immediately at the moment. But this is looking more of a ending diagonal structure, right? So of course, we are expecting something like this. If we want to buy, eventually we need time for price to actually commit to the upside, right? So some sort of a break of a structure high, then we'll definitely be looking at dollar kind of reversing back to the upside. Okay. So with that said, I think this week here, probably not gonna be having a lot of like opportunities in the major pairs, just based on dollar index itself. Okay. Now, if you look at euro dollar over here, then it's kind of a little bit of an inverse of things, right? So you can see this entire structure, it's not really impulsive. It carries, the element of being corrective. The pullback has been deep. And of course, last week we kind of broke that, right? So, again, there is upside opportunities, just that you want to be cautious that fifth wave may be completing on a bigger degree, and therefore, yeah, okay. In any case, I think, to us, we don't really do long horizon kind of like buy and hold for like a couple of weeks, right? A lot of the setups I'm looking at is at most like average about 2 to 3 days. So I think over here, if we get a buy opportunity for this week, Okay, I have no problem entering on a buy, right? Because if this pulls back towards some key levels around that 1.1460, 1.147, I'll be interested to still look for the buy. Okay, at least one more push back up. And then after that, we'll see how the market develops from there. Okay, however, if let's say the market just decides to come down impulsively and successfully take out this low, then we can see that wave 5 may have completed over there. Okay, so this week we're generally still going to be bullish, and if price were to come back towards, as I mentioned, the key level 1.1470, that's definitely an area to look for an opportunity to buy. Okay, GBP USD pound dollar, looking at a potential diagonal here as well. Okay, so this is a very good example where you probably do not want to be too aggressive in buying based on this. But what you want to be looking out for is some sign of confirmation where the market is telling you we are reversing to the downside, right? So as of this morning, this is where the key kind of swing point is, but you can see that as of now, we had a little bit of consolidation. So I'm actually quite comfortable to shift this slightly higher. Okay, and I would say that, alright, if price by tomorrow can take out this low impulsively with momentum, then the pullback would start to present some sort of an opportunity to get involved in the sell. Okay, so the trade plan for this week on pound dollar is to wait for price to make an impulsive move to the downside, and then we'll start to look for sell trade opportunity. Right, so if I kind of zoom out on this, again, you can see that this is quite a bit of an extension to the upside. Okay, so there are a lot of room that we can look for to the downside, right? Even if it's not a major reversal and we just assume that, alright, this is extended, let's look at some sort of a pullback. Okay, this room to the downside is more than enough for us to kind of look for some short-term sell trade. Okay, so that would be the take on the pound dollar. Okay, then of course we also have Aussie dollar, very similar to the pound. Okay, but again, we don't really have a nice setup at the moment. Even on the lower time frame, there isn't much of an opportunity. Okay, you can see very choppy up and down. Again, this happens simply because of the I would say partly from Iran and Israel event, right, where we have like risk on, risk off. Aussie dollar is one of the pair that would experience a bigger volatility simply because of its risk currency. So this is the part where I think Aussie dollar, you just want to be a little bit more conservative right now. Okay, and wait for more confirmation before committing to any particular trade. Okay, so this one here, that's why I'm not flagging it as of now, right? Because there's really nothing that I'm too keen, and I just don't want to spend too much time and focus on this particular pair at this moment. Okay, then we have the dollar Canadian, still coming down quite a bit, but again, this is looking very much a potential diagonal. Okay, but again, doesn't mean you just buy at the bottom, right? You always want to wait for some sort of a sign that the market is indeed reversing before trading that reversal trade. Okay, so dollar CAD, I think this week probably not gonna get a lot of stuff happening here as well. Okay, Canadian is kind of like strengthening because of crude oil as well. If there's a war outbreak, tendency of oil is seeing upside pressure, and oil being correlated to the CAD, and then CAD will also see upside pressure, right? So Aussie dollar, dollar CAD, I think this week probably we're not gonna get a lot of stuff. We'll probably just have this to put aside, okay, and let market kind of continue to develop, and until it shows something clear, we're not gonna jump into them. Right, dollar yen. Okay, now dollar yen is one that I'm currently, okay, so this is a H4, right? Later I'll drop to the H1, and we'll talk a little bit about contacts, right? which I do mention from time to time, the element of context. But what I'm seeing on a H4 on dollar yen right now is that we have this as an impulse. Okay, and of course right now the market is kind of like consolidating, right? Since the start of this month, right? Since the end of May, price has been like in this range. Okay. So from Elliott wave point of view, we always expect the simplest structure or simplest pattern, which is a 3-wave pattern, right? In this case, your W, X, and Y. Okay, so the simplest expectation is always for price to, if it's kind of like WXY slanting to the top, we'll always expect price to break the first top, right? And then of course we have a little bit of fib expectation over here, which again is just above that. It's perfect. Okay. So this is the expectation that we have right now, right? Very, very simple. 1, 2, and then 3. Okay. So on the higher time frame on the H4, there is the opportunity to capitalize on this. Okay. So if you look at it from a purely 4-hour time frame, right? You would say that the focus would be more of like waiting for price to come here and then look to sell. Alright, if that's the expectation, right? Then you'll be looking to sell here. However, because we're on a 4-hour, which means lower time frame, we have sufficient room to potentially capitalize on this push to the upside if price were to develop like this. So the context here is really looking at the higher time frame, right? And spotting an opportunity on the shorter time frame. But we understand that if we're going to buy this up, some factors we need to consider, right? One of it obviously is the risk on risk off environment, because we are talking about the yen pair over here. Typically, if we are in a risk off environment, the yen tend to strengthen, and then vice versa, right? The tricky part about looking at risk environment in the market is it can shift from one to another fairly quickly. Okay, and oftentimes it's a little bit difficult to prepare unless you're on the ball, you're in front of the market, and then things happen and you can't be aware of it. So that's something you need to also consider if you are looking at some of this pair here this week, right? Which I kind of also put it into today's report, talking about this kind of risk environment is constantly shifting. You just need to be aware of it. Okay, so this week here, if you take a look at dollar yen on the lower time frame, we do have a setup, a valid setup over here, okay, which can align with the higher time frame expectation as well, right? On the H4, we are expecting this to just go higher as part of the 3-wave development, okay, and then on the lower time frame, we have a valid setup where we have like liquidity sweep, then the market shift back. There's a fair value gap over here as well, and it's currently pulling back. So somewhere towards the fib area would present an opportunity to buy. Okay. Now obviously this setup here has some confluence as well, because if I go back to the higher time frame, okay, this is the hourly setup that we're looking at, right? So you can see that this pullback they came into some sort of a area as well, where if you draw a trend line, you can see that connects. Okay, this setup also occurs near the bottom of this swing, right? So there are some confluence factor for this setup. Okay, now I'm not saying that that's going to be like 100% working out, but that's the part where it gives a little bit of confidence and confluences to this particular trade, right? So we'll look at this here. We'll, essentially my trade is always going to be a pending order. If we can get price to come back towards around 143.40, that would be a nice little opportunity to buy this up. Okay. So in the context of this particular trade, you can consider to just take profit, just at the recent swing high, which will give you an average of 1:2 risk to reward ratio. Alternatively, you can aim for 146.45, right? Or basically where the previous top is, around 146.30. Okay, which is gonna put you way above here. Okay, so you can potentially extend this to like risk reward ratio of 1:4 as well, and then you can consider like trade management, take partial profits, let the remaining position run and things like that. Okay, so that's entirely up to individual how you want to manage the trade when it goes in your favor. Okay, but this is definitely one of the valid setup I'm kind of looking into, right? Don't look at. Then we have gold. Okay, gold in this case here, you can see that this is a very nice little diagonal structure. I will put this as a leading diagonal. Okay, so if you understand Elliott wave, there's a slight difference between leading and ending. The main reason, or say the main difference, is really where this diagonal structure is forming, right? So in this case here, you can see that this diagonal structure forms the very first move after a decent correction, right? So this is essentially what we'll call a leading diagonal, which is actually a continuation, because after price developed this, we expect a continued move to the upside. Okay, but a leading diagonal is also indicating that there's a good possibility the pullback is going to be a little bit more significant, right? And if we were to just look at Elliott wave perspective, the pullback would potentially come back to where the start of the corrective move is, right? Which is around the zone of 3250. Okay. So again, this would mean what, right? This means that we are opening up the opportunity to look for some sort of a pullback trade. Okay. Now, as of this morning, there isn't much of a setup, but if you look at it right now on the hourly time frame, a valid setup may be building, right? So for those of you familiar, you can see that we have a couple of like breaks to the upside, but it's not really carrying a lot of momentum. Depending on how strict you are, of course, you can say that this low has been broken. But essentially, if you want a little bit more conviction from the market, you want this low to be taken out. Okay, so then what we have is a liquidity sweep, a break of structure if price continues momentum to the downside. And then when it starts to pull back, this is some area that we can consider. Okay, and then we'll look for the short as part of the pullback to the downside, right? So I would say gold here, definitely you want to have it in your watch list this week. Depending on, again, how the market is going to continue to develop for the rest of today going into tomorrow, we might have something that we can look into to sell it in the short term. Okay, and see how things go, right? But of course, again, understand gold is very sensitive to risk environment as well. Okay, if the crisis between, or the conflict, right, between Iran and Israel continue to escalate, then some of this news would impact prices, and again, you want to be aware of it. Okay, so that's on gold. Silver here is pretty clear in terms of the direction. Okay, now a lot of times you would hear me say, oh, gold and silver, they are kind of like correlated. But you can look at these two charts right now, and very clearly the structure price pattern is very different. Okay, so correlation, I always highlight, right? Again, it's a reminder, you don't want to make a trade decision just because of market correlation, but you use market correlation as part of your risk exposure management. Okay, in other words, if today you have a buy trade set up on gold and at the same time a buy trade set up on silver, then you want to understand these two are correlated, and then you use that understanding to manage your risks. Okay, but I would never use market correlation as a decision on whether to take a trade or not, right? So I wouldn't say that, oh, because gold is coming down, I'm going to sell silver. Okay, I'll always analyze the chart as it is, as an independent asset. Okay, because even though it's a correlated move, sometimes it doesn't move in tandem, right? In this case here, you can see silver has upside potential momentum, but silver has upside momentum, but gold has been lacking quite a bit, right? So silver, the structure is a little bit different. This one here, we're looking at a possibility of 1, 2, 3, and then this is wave 4, and this will be the key area to look out for another push to complete a 5-wave structure. Okay, so silver here, you can also look up for a setup, right? So I've put this morning, but didn't really put in this setup into the report because this is not something I'm trading. Okay, but it doesn't mean it's not valid, right? So for those of you who are keen, you can see based on the hourly, you can take this as a structure low, right? The internals. This is a very clear break. Okay, if this pulls back here towards 34.90, that would also confluence, okay, to your higher time frame, right? Because 34.90 would put you somewhere here, okay, which is within this zone, right? So you have a higher time frame confluence with the lower time frame as well. Okay, so those of you who are interested in silver, definitely valid, something that you can look into as well, right? It's just that I don't personally trade silver. Okay. Crude oil, very similar to the structure on silver as well. Again, just pay attention on the developments between Iran and Israel. Again, when there's a potential war outbreak, oil prices tends to shoot up, right? And then volatility will increase. Okay, so this one is pretty much similar to silver, right? You can see the structure of these two, kind of like looking at a 5-wave move right now. Okay, so crude oil, key level is somewhere between 70.80 to somewhere between 69.50. Right, so this two definitely can pay attention to that. Then we have S&P, right? So S&P again is very sensitive to risk on, risk off, right? Because equities tend to go lower during a risk off environment. Okay, so this one here, to be honest, I'm still very bullish on the equities for the year. Okay, I think at the end of the day, by end of this year, there's a very high possibility the equities will be ending the year bullish, right, as compared to where we started off. Okay, the reason for that is very straightforward, because from a macro angle, we are looking at the Fed potentially still in a cut rate direction. Okay, so that would mean general positive upside for equities in general. Okay, so this one here, whether you're interested in, I mean, right now we don't really have a clean, nice little sell. Okay, but I'm expecting some sort of pullback, right? In other words, if you're interested in buying into equities, you don't want to buy now, right? You would rather wait for this to pull back towards key level, then you look for your buy. Okay, somewhere between 5,870. Okay, so that's generally on S&P. The pound yen is still in a consolidated phase, so this one you're just gonna keep this aside. Be patient, wait for price to kind of break out before we kind of come back to that. Nothing too much on that. You don't want to spend too much time on a range bound kind of instrument anyway. Okay. Then we have the Aussie yen. Okay, so you can see that volatility here, right? This entire move is because of the risk of environment, and the market is kind of like recovering right now. Okay, going back to where it were last Friday. Okay, so this one here, in the whole structure perspective, we are generally still expecting some sort of a 3-wave move, right? 1, 2, 3. The thing here is this is a V-shaped formation, so we'll probably not kind of like commit to a direct sell trade. You can keep it in your watch list and start looking out for an opportunity. Okay, but of course for me, I think with this impulsive pullback, you probably don't want to just jump into a trade. Okay, so the thing here is just be aware, it's not like you just pull your flips and then every other pullback towards flip you just take it, right? You want to add layers to that as well. So this one here, if it starts to build something like that, okay, then this is a decent setup. Okay, so you want to wait for something like this. Okay, I think hopefully everyone's clear on that. Okay, yeah, so we're still looking at downside, but probably you want to wait for some sort of a lower time frame setup to establish there, okay, to give us that trade. Pound odd, right? Pound odd is something that I have a setup here as well. Okay, so on the 4-hour, this is what I'm looking at, right? Okay, to be honest, this is not like the best kind of structure, but I'm just looking at the possibility of this developing as a 1, 2, and then 3, right? I mean, just to break this. Okay, Then we have the confluence of this impulsive move, but of course that impulsive move is really because of the conflict of risk off as well, right? Where the risk off environment, the Aussie weakens and therefore pound Aussie just shoot up. Okay, and of course we have this very nice 61.8 as a key area for the bounce. Okay, so this one here, if you go down to the lower time frame, okay, again this was sent out in the morning as well. So price is kind of approaching the key level, right? And basically that's our setup. Okay, so this one here, we have a little bit of an order block here. Okay, where we have this push up and then a tiny bit of a retracement and a continuation. We do have price taking out this high here as well with momentum. Okay, so that's basically a break of structure. And then basically right now we're looking at price coming back towards like the key level for entry and then stop and target, right? Yeah, so that's as straightforward as it is for this setup, right? Again, if you want to go for extended target, right now we're looking at this high. If you zoom out a little bit, okay, I mean that's not a huge difference, but you can potentially look for that high as well, right? It's like 30 pips difference. To be honest, that's not a lot of things, right? I mean that's not a huge move, okay? That's not a huge difference. Probably you just be conservative and just take your profits at 2.1, right? Because that's like a psychological number as well, this high. Okay, so that's what we have on the pound odd. Okay, I think probably by tonight or tomorrow we'll probably get tagged in. Okay, lastly here on the list is BTC. So this one here you can see is a very nice little structure as well. Okay, very clear. We have the expectation of a pullback in tree, right? At the same time, we have this very nice little impulsive move as well. This looks corrective as of now, so if you're into crypto, okay, this is definitely something that you can consider, right? If you can go down to the lower time frame, you know, I have this in mind, but again, I'm not trading actively in the crypto, right? So that is that little bit of a fair value gap here. Very nice little reaction. Of course, the 618 is not like in perfect alignment, but okay, we're not looking at that perfect pit reversal, right? Basically, that's the area of interest. Okay, yeah, so again, if a setup is not in the report for some of you, it doesn't mean that it's not a valid setup, right? Because I'm just sharing with you things that I'm looking to trade. Okay, which again, every trader would have a slightly different preference. In terms of like how strict or how lenient you want the criteria to be is also very different for different traders. Yeah, so just bear that in mind. Okay, opportunities are there in the market. Sometimes I don't post it doesn't mean that it's not there, or it doesn't mean that it's, you know, invalid. Okay, because I'm mainly sharing those setups that I'm kind of like trading it, right? Yeah, so to me, the two that we have is the dollar yen and the pound odd. I think gold here will be very interesting to be looking at going into tomorrow, or you know, going into the remaining part of this week. BTC definitely there, right? For those of you who are more into crypto side of things. The rest of it probably, I mean, Aussie yen potentially, depending on how market's going to develop on the lower time frame. But the rest of things, probably not too much. Okay, probably not too much. Euro dollar as well. I think I see here. Jantor mentioned or has a question, right? Is it good to short euro dollar as price has already made a fake out at 1.1570? Yeah, so I think I know what you are referring to, right? Maybe on the lower time frame is a bit clearer, right? So I think you're referring to this. Then from here to here, right? Yeah, I mean, in a way, this is definitely a valid short-term trade. Okay, it's a valid short-term trade. In fact, on the 15-minute, this is a particular trade I'm taking. On the 15-minute scale. Okay. Now, why why I would say it's a short-term trade, because I think just now we cover, right, on the H4, we're expecting this pullback and then one more push up. Okay, so the context is important because you probably do not want to, I mean, if this trades work out, you probably don't want to have like too extended target, right? Meaning you don't want to have your take profit too far off. Because there's a very likelihood on a hard time frame, you'll probably just tag somewhere between 618 here, or maybe just slightly higher at 1.15. And then market will start to maybe make another move higher. Okay, simply because right now we are still in a bullish move on the higher time frame on the H4. There's still no reversal sign yet. Okay, so if you are selling this on the lower time frame, it's a valid one, but understand the context of it is you're doing a counter trend move. Okay, can the trade work out in this kind of situation? Yes, right. But just understand that you are running the risk where you're trading against the major trend. Okay, so again, it's an individual decision to kind of make. Are you comfortable in doing that? Okay. Yeah. No, and I think another pointer here is you don't need to win every trade, right? Because if you're following the risk, kind of like Fibonacci ratios, and then you're following the risk to reward ratio, the average of this kind of setting is always about 1:2. Okay, I mean, depending on how precise the entire setup is, but it's about 1:2 on average. Okay, what this means to you is if you only win half of the trade you take, you are profitable. Okay, because that's how the expectancy works, right? I mean, based on your risk reward of 1:2 on average, you just need to win half of the trade you take, you're gonna be profitable. Okay, if you can increase your accuracy by maybe another 5%, bringing up your win rate to 55%, you're even more profitable. And if you can bring that to 60% win rate, then you're even more profitable, right? So that's how the whole stats works. Okay, yeah, so that's on euro dollar. Pound yen here, I'm just gonna be neutral. I think right now it's range, so there's really nothing much that I would focus on. Okay, I'll just leave it as for now for pound yen, and then wait for price to kind of break out of it. Okay. Aussie Canadian. Okay. Aussie Canadian is not a pair I'm monitoring on a day-to-day basis. But I think we are entering a key level, or I would say price kind of entered a key level, and currently have a little bit of a reaction there. Okay. On top of that, this move here is corrective. Okay, so what does it mean is that you're probably gonna focus more on upside. Okay, and just based on this time frame scale, if you drop down to the hourly, okay, we might get a setup, right? I mean, we have some of the conditions here already. We have this sweep of the low, right? We have that little fake break, not anywhere, but of course in the context of like previous significant area where price bounced. We don't have a clear break here yet, right? But you can run the expectation that this would likely continue, and if it does, great, right? Then you just wait for the pullback. There's some, I would say like very, very small failure gap here, or even lower as part of your confluence, right? Then you can run the fit to help you get that level. Okay, so yeah, Aussie Canadian, that would be something to look out for. If you get a nice little buy opportunity and price starts to move in your favor, you can seriously consider on the 4-hour, right? Because of this structure, go for the extended targets. Okay, in other words, instead of like, for example, just targeting here to give yourself a risk reward of ratio 1:2 on average, you can actually extend this to like the previous top, right? So you can run TP1, TP2, TP3, and then just trail your stops. Okay, because you can see that on the higher time frame scale, there's a lot of upside opportunity, right? If you run it to here on a TP2, that gives you about 4.7. If you run it all the way up there, that's about 8.6. Okay, so yes, that's on odd cap. Okay, hopefully that's clear. Good. Cool. Any questions? All good? Okay. If no other questions, hopefully it's clear. Yeah, that's basically what I'm looking out for this week over here. Okay, as usual, I'm just gonna keep you guys updated on a day-to-day basis as the market continues to develop as well. Okay. So all the best for the week. Let's see how the market continue to develop for the week here, and see you guys in the next session. Yeah.